It seems a little bit sticky, with a good performance on gold, but I think silver will start to get a bid. The silver story is getting out there. People are hearing, it's not a poor man's gold, it's actually a strategic metal, and it's required for even this video that we're doing today. Without silver, we couldn't do this, and people are waking up to that fact. I think more likely we're going to find a supply shock, because we've had deficits now for 5 years, and you can't run deficits like that forever. The silver's coming from somewhere, obviously. I chose silver because it was so unique and so strategic, in my opinion. And we've had rallies, periodically, and I think, I think, as I said, it will perform nicely.
Silver remains significantly undervalued, while gold continues consolidating its recent outsized gains, topping out at a record $3,500 on April 22nd. Recession fears have driven the gold-silver ratio, GSR, back into triple-digit territory, highlighting how silver is still primarily viewed as an industrial metal rather than a precious one. Keith Neumeyer, president and CEO of First Majestic Silver, is responding by hoarding silver instead of selling it. He stresses that silver is no longer just the poor man's gold. According to Neumeyer, the current GSR level has only been seen 3 times in recorded history, each time preceding a significant silver revaluation. Historically, silver tends to outperform gold during the later stages of a precious metals bull market. If the GSR reverts to its 27-year average of around 60 and gold holds its ground, this would imply a silver price rally toward its all-time high of $50 per ounce. A significant structural issue bolsters that potential. Silver mine production has failed to meet annual demand for 5 consecutive years. In response, the few existing primary silver producers, including First Majestic, have started to pivot toward growth strategies, cutting operational costs and focusing on delivering more substantial returns to meet rising investor expectations. Many now anticipate a breakout above silver's multi-year resistance at $35. Neumeyer believes the market is nearing a supply shock. While public understanding of silver's strategic importance is finally growing, he acknowledges the slow awareness campaign. He committed to a mission 22 years ago when he founded First Majestic Silver to educate the world about silver's unique value and critical role in the global economy. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update.
The gold ratio has been at this level only 3 times, I think, in the last, in history, actually. And every time it hits this ratio, it always goes back. It seems a little bit sticky, with a good performance on gold, but I think silver will start to get a bid. The silver story is getting out there. People are hearing, it's not a poor man's gold, it's actually a strategic metal, and it's required for even this video that we're doing today. Without silver, we couldn't do this, and people are waking up to that fact. And we just came back from London with some institutional shareholders that are really looking at the silver space, and it's quite nice. Now, I think more likely we're going to find a supply shock, because we've had deficits now for 5 years, and you can't run deficits like that forever. The silver's coming from somewhere, obviously, but these banks who have these paper shorts that are delivering into the commercials. If you're BMW or Samsung, you've got to deal with one of the banks, and they have a paper contract against that trade, and they're getting metal from the miners and delivering that metal to these big consumers. And I think what's going to happen is the bank just won't simply be able to find the metal, and compliance department will walk into the trading desk and say, hey, what the heck are you guys doing? We can't fulfill this contract for this metal that we're supposed to be delivering to this customer. And then they force the trading department to move in and start collapsing some of those trades. I think that it has, but not fast enough, mind you. But I put the company together 22 years ago, and I've been educating the market on silver ever since. And when I was put the company together, I chose silver because it was so unique and so strategic, in my opinion. And we've had rallies periodically, and I think I think, as I said, it will perform nicely. But we're consuming over 1.2 billion ounces as through industry, and 70% of that's industrial, and we're only producing, as the mining sector, 830 million ounces a year. So that disconnect, and it looks like the ball's not going to go backwards. Solar panel production is not going to start to fall off. Computer production, cell phone production, all these big drivers of the silver demand aren't going anywhere. Well, we carried over 600,000 ounces of silver over the quarter, so that's worth at current metal prices around $25 million in that range. So that's a lot of silver, and we do have the mint, so we do have silver in our vaults, and there's silver in storage at the mines as well. So we'll continue with that process. I think we're going to have a great year for silver. It's highly underperformed gold, and I think it's a good time to be hoarding silver. I don't, not for a mining company.
No.
I don't think so. We produce a lot. Like what good is that?
I was going to say, you produce at $20, why buy it for $32?
Yeah, exactly.
So.
And we might as well put that money into the stock and just buy some exploration. And we've got around 30 rigs active right now, 270,000 kilometers of, or meters, 270,000 meters of drilling this year. And so it's a pretty robust drill program. We've seen the Coeur transaction with Silvercrest. We've seen the Pan American transaction with MAG. There's really very few producers left out there that are of any size. And for us, when we're looking at M&A, we want producing assets. It doesn't do us any good, to go buy an exploration portfolio. We need permitted assets that are either under construction or just coming into production. Maybe even distressed assets, which we love to buy. If they're available. It's hard to have a distressed asset at $3,000 gold and over $30 silver, mind you. But we're always looking, and there's no immediate plans. And even if there was, I probably couldn't tell you anyway.
Amid escalating geopolitical tensions, persistent inflation, and increasing distrust of the U.S. dollar, central banks ramped up their gold purchases in early 2025. Data from the World Gold Council shows that global central bank gold reserves grew by 243.7 tons in the first quarter of 2025, surpassing levels recorded in 44 of the past 50 quarters. This sustained buying trend follows record-breaking demand in 2022 and 2023, signaling a continued shift among especially emerging market nations away from dollar-based reserves. Neumeyer highlights a major market disconnect. Central banks are buying gold, but not silver. Despite silver's much lower production rate, 7 ounces for every ounce of gold, versus a natural ratio of 16:1. With the gold to silver price ratio above 100, he argues it's unsustainable and believes silver must hit triple-digit prices to attract new investment. Now, let's redirect our attention to a video.
Central banks are buying gold, and they're not buying silver. Maybe we need central banks to start buying silver. I don't know, but it is very much a disconnect. The mining sector produces, for every 1 ounce of gold, only 7 ounces of silver. The theory is that there's 16 ounces of silver in the Earth's crust compared to gold, and we're not even close to mining 16. We're only mining 7-1. So, having a ratio of over 100 just makes absolutely no sense to me. I hope it's silver going up. I don't have a crystal ball, but it's gold at these prices is obviously quite good. We're making a substantial amount of money on our gold sales, which is really nice to see. I hope that changes for silver. Well, should be triple digits, right? I coined that phrase, over a decade ago, and when I was laughed at and criticized a number of times, and now there's other people out there talking about even higher numbers than $100. I've seen estimates of $200 to $300 silver, which I've never predicted, but that would be pretty incredible if that happened. Well, on catalysts, we've got a huge exploration program, as we talked about already. We're going to have news out on our couple of core assets over the next couple of quarters. Some really good results coming in from our drilling programs, which we want to get out to the market. Hopefully there's a reaction in the share price. We'll see. On the M&A front, we just pulled off the largest transaction in the company's history. And we have to absorb it. It takes a while to integrate an asset of that size. All the IT systems that have to be upgraded, and we have to put First Majestic's kind of look and feel on the asset, and that's underway right now. Changing all the logos at the mine, for example.
Everybody's vests and everything.
Exactly. And it takes time. It's not a simple task, and getting the IT systems all in place, that takes time as well. Training, and you got to install them over a period of quarters, and yeah, it's a process.
Yeah.
So we need to get through that, and maybe within the year, and maybe next year, maybe will be something else will come up. But we have a whole team of people internally that look at M&A possibilities. So we have several NDAs in place, and we're always watching the market for interesting things that are going on. Well, what we're seeing is there is when an exploration company does come out with an interesting drill intercept, the stock actually moves, and that's fairly new in the last year basically. So the market is slowly paying attention to the exploration space. The developer space is having a tough time. The money is just simply not going into the developers, which is unfortunate. It does create an opportunity for the majors, because a developer that's close to permits or maybe has their permits in place already become targets for the majors, and that's a space that we've got our eyes on.
Silver holds a unique position in the market, acting as a store of value like gold and as a critical industrial metal used in electronics, solar panels, and other green technologies. This dual role creates distinct price dynamics. Strong industrial demand can help support silver even when investment interest dips. A rising silver-to-gold ratio is often a strong signal of a coming inflationary cycle. Thanks to its industrial relevance and speculative appeal, silver tends to be more responsive to inflation than gold. In contrast, gold remains a traditional safe haven asset tied more closely to negative macroeconomic trends. Do you think silver's industrial demand gives it an edge over gold in today's economy? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.